Top cryptocurrencies continue to struggle in 2022, falling right alongside stocks. Not just falling, but straight down crashing. Bitcoin is down close to 40% on a year-to-date basis and down nearly 60% from its all-time high, near $80,000 Canadian, set back in November of 2021. At the same time, Ethereum is down close to 60% on a year-to-date basis. Now, before diving further, a quick shout out to Virgo CX, a trusted Canadian crypto platform, for sponsoring today's video. While the losses can be distressing for investors, they also offer a chance for people who are interested in crypto to review their financial plan and get into this volatile asset class if it makes sense for them. When something goes on sale and you like it, you should buy it. This not only applies to your favorite tech or clothing brand, but also to asset classes that offer growth potential. To be sure, you shouldn't rush into any sort of investment just because it appears relatively cheap. Same reason you shouldn't be loading up on the next hyped up penny stock unless you understand the business and have done your due diligence. Buying crypto doesn't fit your long-term financial goals, then you shouldn't buy it just because it's trading at a discount. When it comes to investing your hard-earned money, taking a holistic investment approach is better than trying to time a volatile market. You need to have a clear goal on why you're buying crypto, instead of just getting pulled in because the price is dropping or some influencer has made an eye-catching thumbnail with a shock face and a rocket ship emoji. I've heard from a lot of you on why you're either looking to invest in crypto or have already started accumulating. Some of the reasons I've heard is that you see it as a store of value. You view it as uncorrelated to stocks or want to own it because of increasing rate of adoption. This to me means you are doing your research. You're trying to learn more before putting your money on the topic. Before buying into crypto, you need to be conscious of how much of your portfolio will be exposed to this asset class based on your risk tolerance. You need to have a firm grasp on how much you're willing to risk before you buy. For example, if you want 25% of your portfolio to be based on crypto, and you can't stomach this recent volatility and market downside we're seeing, then maybe 25% doesn't make the most sense for you. Investors should expect that cryptocurrencies will continue to be volatile. What's more is that this historically risky asset class has not been tested in an environment like the one we're seeing today, where interest rates are rapidly rising. You almost want a mindset that when you invest in crypto, it will go down further. That will ensure you only put in what you're comfortable losing. When you set your expectations like this and crypto does well, you're in the benefit from the gains. But if it doesn't, then you've mentally prepared yourself for a loss, especially if this is your first time dealing with crypto. Essentially, if you wake up tomorrow and crypto goes to zero, then you should still be able to make your rent or mortgage payment. When it comes to investing, there is no shortcut to having a well thought out and clear investing plan. If you're dollar cost averaging on the way down, then you should be dollar cost averaging on the way up. This also reduces volatility and also enhances returns. As we take a look at our current macroeconomic factors, we find ourselves in a chaotic combination of interest rate hikes, fears of imminent recessions, and a military conflict in Europe. All this leads to uncertainty on where the market is headed, and that's why you have to have this investment plan so you can refer to it when you have a state of doubt. If you're just beginning your crypto journey, you're likely very eager to trade, and I get it, really. But don't rush it. Take the time and develop yourself a little bit of a crypto trading strategy and educate yourself. For example, do you know the basics of blockchain technology and Bitcoin? Do you know what is circulating versus total supply? Do you understand what inflation is? Do you know about exchanges, wallet, private keys, and public keys? If you can't answer these basic questions, then you'll be in trouble real quick if you're just investing on a basic whim. My advice, invest in what you know, and if you don't know, then learn. What makes Bitcoin and other cryptocurrencies innovative is their underlying technology. But if you don't understand the foundations of this technology, then the road for you will be risky. You don't want to rely on others' crypto knowledge just to make your own investment decisions. Until you can judge these projects for yourselves, you may be missing out on opportunities. To avoid this, find educational resources that you can trust, take the time to learn, and most importantly, enjoy the journey of learning. Another key factor when it comes to investing or trading crypto is choosing the right platform that support your goals. I personally use Virgo CX. It has a seamless onboarding process, multiple deposit options, whether it's Canadian dollars, US dollars, or other cryptocurrencies, more than 60 plus coins for you to explore, and constantly new coins are being added. They have an average buy and sell spread of only 50 basis points, which is one of the lowest in Canada. And why does the spread matter? Because the lower the spread, the better value you get. You also get free cash in and out, free crypto deposits, and no trading commissions. There's so many options in this space when it comes to choosing the right platform, it can be hard to tell which one is the best for you. If you want to learn more about Virgo CX and why it's so important to choose the right crypto platform, then make sure you check out this video. Once you're ready to invest and pick up some crypto, or maybe you've already invested, one thing you have to pay attention to are the fees. This not only applies to crypto, but for any investment. You can't control how the market will react or how your investments will perform, but you can choose how much you're willing to pay in order to invest. When you're new to crypto, you can get very excited about the market, especially when it's on the upswing, or you can get really nervous about losing money when it's on the downswing. But in either case, you want to avoid making like 20 trades a day going in and out of various coins. Ultimately, many of you may lose from fees, or because you make a bad trade or a mistake and then trade more just to recover your losses, only to find out that you're digging yourself deeper and deeper into this hole. Trading too much can lead to poor decision making, and it's just a flat out bad crypto investing strategy. Overtrading may also increase your risk of a tax liability. The IRS and the CRA view every trade as a realized gain or loss. In other words, let's say you're buying Ether with Bitcoin. This will be considered to be a taxable event and will create a realized gain or a loss. Why is this the case if you're just buying one crypto with another crypto? Well, because the CRA or the IRS are assuming that you first sold your Ethereum to, let's say, US dollars. Then you went on to purchase Bitcoin with that US dollar. Even though this is not what has happened on paper, but from a tax perspective, this is the background case. Ignoring both tax implications and exchange fees will severely impact your overall crypto investing strategy. Tax implications, too many fees, too many bad trades are just a handful of reasons why you should not overtrade. I'm hoping at this stage of the video, I've sort of drilled into your head that when it comes to trading crypto, that you want to avoid overpaying on fees and why it's so important for you to keep track of all your transactions for tax purposes. And that's why it's so important to make sure you choose the right crypto platform that doesn't nickel and dime you on fees. Plus, you want to choose a platform that will give you the tools you need, like keeping track of your transactions so it's easy for you to report when it comes to tax season. Now, as you learn more about crypto on your investing journey, you'll eventually reach a stage when you're making comparisons to this asset class against the stock market, and it's a totally fair comparison to make. If you're already familiar with how the stock market works, there are a ton of similarities between the stock market and the crypto market. This is great background knowledge to have. But there are also differences between crypto and the stock market, and I want to go over both. When it comes to stock trading and crypto trading, investing tools are the same. This is especially true when it comes to technical traders using tools such as charts to analyze the market. You can also use the same tools for technical analysis on stocks or crypto on either market. Whether you're buying shares of a company or crypto, the price of both assets are shown in fiat currency, for example, either in US dollars or Canadian dollars. Trading and investing strategies are also very similar. For example, in the stock market, traders have options to either day trade, swing trade, or position trade. And if you don't want to use either of those options, then you can opt in and just hold your asset for a really long time. Similarly, traders in the crypto market, you can use the same strategies just like the stock market. The thing about the stock market is that it's been around for generations, leading to innovative products such as derivatives and techniques such as leverage to inflate either gains or losses depending on how you're doing. Now, these same products and techniques have also been ported over to the new age crypto market. But because the stock market has been around for such a long time, call it old age, there is generally less volatility when you compare it to the crypto market. The crypto market, on the other hand, is accustomed to wild swings where you can see double-digit gains or losses in a matter of hours or seconds. If you're seeing double-digit losses and constantly your crypto is going down, it's totally normal because it's the very volatile new asset class. Age is a significant factor when it comes to trading. And it's simple, the stock market has just been around for a very long time, and the crypto market has maybe around for a decade or so. And all that means is that the market value and trading volume is just much more different when it comes to the stock market, comparing that to the crypto market. And because the crypto market just hasn't been around long enough compared to, let's say, the stock market, that's another reason why you see such volatility when it comes to this crypto asset class. Now, hopefully you've learned a lot while watching this video and are now more informed and knowledgeable when it comes to the crypto market than you were at the start of this video. Now make sure you hit that like, subscribe, and thanks button so you can stay on top of all the latest news that's coming out of the crypto market. Thank you so much for watching. Make sure to take full advantage of the Virgo CX bonus sign-up offer, link in the description. It's free money to try out crypto, so why not? You can now also sign up for channel membership, provide direction for future content, and just plain out show your support. That's it for now. I'll talk to you in the comments section.